Shall I start again?
Yes,
Start now?
1 minute, 1 minute. I'll go live. Here. Yeah, live, sir. You can start, sir, please.
Yeah. Good afternoon to all the members who are present in this webinar on the topic of GST journey so far. I welcome the chairman of SIRC, C.H. Chinnamasthan Talkala, the chairman of GST committee, C.A. Upala Subbarao Garu from Guntur, and the speaker of the session, C.A. Siva Prasad Garu from Vijayawada. So good afternoon to each one of you, and also the delegates who are participating in this webinar. So friends, GST has been with us. This is the 5th year since the GST has come into existence, and most of the professionals are working very hard to ensure that GST compliances are done and the revenues to the central and state governments are achieved as per targets. So GST, as I see, has grown from strength to strength, and every year, almost every month, almost is crossing 1 lakh crores in terms of revenue generation. So I'm sure the speaker would ensure that he would share his thoughts, experiences as to how the GST has moved from 1st July 2017 to 1st July 2022. With this brief welcome, I would request the chairman, SIRC, to address the members.
Okay, thank you, Secretary Sir. Sir, any possibility to the chairman of GST can speak? Subbarao sir, are you interested?
Yeah, sir.
Right. Let you speak, sir. After that, I will speak.
No. Actually, I will introduce the speaker also.
Okay.
First, you speak.
Okay. Thank you. My council colleagues, Secretary of SIRC, Naresh Chandra Galli, and the GST committee chairman of SIRC, Upala Subbarao from Guntur, and the resource person of this today's program, Siva Prasad, and my dear members joined virtually. Very good afternoon and warm welcome to all for this session titled as GST Journey so far. First of all, I wish the whole and the family members of Chartered Accountants happy 74th Chartered Accountants Day. And the special thing for today is eventually happens to be a GST day and the Doctors Day and the CA Day. And more addition to that international jokes and jokers day also, because today that's all these professionals like doctors and chartered accountants always on the professional busy. They'll not give the relaxation, so that this is the coincidentally the jokers day also one of the day. So we need to recollect that jokes and be happy other than the clients busy. Members, being safeguarding this medical health is the doctor's profession, and the other is the chartered account is safeguarding the financial health. The third one is the GST, which is acting as a fuel to the country as run as smooth. I'm happy to share that the celebrations are on the CA Day and being organized throughout the country in the grand way. We at SIRC conducting that several programs as a part of the CA Day, and early morning we have the walkathon, which is grand success being attended by the good crowd. And post that we had the session with the students, one of the best motivational session taken by MPV sir, through which large gathering was presented, and indeed it was taken too well by the audience and most of the students. Besides, we conduct the blood donation camp in the morning, and was also grand success we did with the help of the Rajiv Gandhi Government General Hospital. And today evening we have the CA Day games for the CA family members, and the felicitation for the CMM senior members and members. And coming to the topic today, it's GST as so far. This have been more than 5 years since GST was implemented in India, July 2017. At the same time, introduction of the GST, most of our practitioner professional thought it going to be a game change and more opportunity will be available for us. That is the true on the one side, and the other side, considering the consistent amendments and changes in compliance side, and sometimes it has become the nightmare as well. Since the implementation, so many notifications and circulars, amendments, above all, the minutes of the GST councils, and no one knows that how many decisions of the council would become in the form of the notifications. This all we should hear from the speaker. I wish my professional fraternity happy Chartered Account Day, and thank you all for giving this opportunity. Thank you once again.
Sir, what you, sir?
Right. Good afternoon, friends. Happy CA Day and happy GST Day. Esteemed Chairman Chenmastan Garu, Secretary Naresh Gelli Garu, and today's speaker Siva Prasad from Guntur. I welcome you all for today's virtual meeting on GST journey so far. As Chairman Garu rightly told, so many notifications, circulars, amendments has occurred during the 5 years. 1 hour is a very short time to the speaker to elaborate all the issues. But I request the speaker to go brief on what the actual journey for the past 5 years. Siva Prasad is a qualified chartered accountant in the year 2003, and he is also a qualified cost accountant also in the year 2009. Now he is a partner in SIRC and Associates Guntur. Actually, his father is my teacher. I learned classes and CA classes from him only. And the speaker is a chairman, Indirect Taxes Committee of Federation of AP Chamber of Commerce. He was a committee member, AP State Grievance Redressal Committee, GST, AP State. He is a renowned speaker on GST and given lectures in so many forums. And actually, his biodata itself is 3 pages. With his permission only, I cut short it into brief. And I request the speaker to go ahead with his speech on GST journey so far. Thank you very much.
Thanks a lot, sir, for the introduction and also this opportunity. So happy CA Day first. So we are all on a happy note, and I thank SIRC for giving me this opportunity to have a retrospect of what had happened so far in the journey of 5 years. No doubt, GST is the biggest reform. So it got started. I'm not going into, because 1 hour is too small a time, as Subbarao sir had noted. And we are all in a happy mode. I know that a lot of cultural events are also lined up in the evening at most of the branches. And from today, there is a motivational session. I'm very happy, sir, for all the efforts that our CA is taking, Naresh Gelli sir and Chenmastan sir. So it's all brilliant program. I feel like missing that when I see and gone through the gallery. So in this happy mode, I just don't want to go into the inner nitty-gritties and the technicalities, but at a very broad perspective, on a bird's eye view kind of a thing, it is very important for us to retrospect and to have a sense of direction. Okay. So it is more like a storytelling on the journey that we are in already. So it started with a very ambitious motive: one nation, one tax. Okay. And also a simplified version of tax to make it as simple as possible. But definitely any reform has got some disruptive value, and we as a profession had given a very supporting hand, undoubtedly, both in terms of drafting and implementation. So we all should be thankful for ICAI for the role that was played. And the one single testimony on that is the background material on GST. So it's almost like we kept abreast with the changes, and then so many notifications that the Act had come up with, so many notifications, so many versions ICAI had also released untiringly. So therefore, the Indirect Tax Committee of ICAI has also did a tremendous job on that. So why these many notifications? Is there? There are two ways to look at it. First of all, the draft itself is inconsistent. Therefore, they are correcting their mistakes. So that is one pessimistic way to look at it, or leave the pessimistic part of that. But that is one way to look at it. And the other way is they are coming up with quick changes so as to suit it to the changing requirements immediately. So just like how software industry has gone into agile development, I believe legislation has also gone into an agile mode. So where from all of this change was necessitated? So in about another 45 minutes of my talk, I want to concentrate on few important areas where there are where the journey had been like the ups and downs and how it had happened. So firstly, the very structure of GST is that it is driven by multiple legislations. There is one central GST Act, there is respective state GST Acts, and each union territory, of course, either state or union territory, one of them will be there. Apart from that, there is an IGST Act, so which deals with interstate transactions, we all know. And there is another compensation cess. So there are 4 levies at any point of time. Okay. And out of these 4 levies, 3 levies are directly to the central government exchequer, and only one is, that is the state or union territory will be to the state. But when it comes to jurisdiction, there is a complete crisscross. The jurisdiction of the officers is not in this pattern. The jurisdiction of officers is like based on the turnover. For over 5 crores of SSCs, most of them were allocated to center and state in a certain ratio, 10:50:50. And then less than 5 crore turnover, they gone into 10:90 ratio. So what had happened is, there is one jurisdictional officer who is enforcing the levy of 4 different acts. So this itself is a very big challenge. When you see the way the taxes are implemented, if you take the commissioner rates of income tax or central excise or customs, there is no such a crisscross of enforcement so far. It was never witnessed in our country, or rather in any country where the GST is implemented. Okay, so here it is like acts are 4, but jurisdictions are shared between 2 authorities. Okay, so there is some sort of a, I don't call it as inconsistency, but there is definitely an approach, a difference in the approach when it comes to the administration. Now, when it comes to the second part, the major salient features of GST, I'm not yet touched upon the journey. When it comes to the salient features, though it is one nation, one tax per commodity, it does not mean that all the commodities are in a single rate. So we started with the 4 rate structure, 5, 12, 18, and 28. But then it failed to accommodate, and then we invented another rate of tax, like 3% had started for gold and jewelry and ornamental kind of things. And then for 1.25 rate had started in case of diamonds and then precious stones. Okay. And then there is another rate of tax by 1.5% and 7.5% in case of builders. And then the list goes on. It is not only the tweaking of the rate that the government had resorted to, but it has also resorted to the tweaking of the value system. Like if you take real estate, the total value is not taxed. Of that, 1/3 is taken as land value and then it is abated. And only 2% is considered as a taxable value, and that was put to tax. So there is another concept of effective rate of tax. Okay. And then the story goes on. In case of solar and wind power and renewable energy devices, they have come up with yet another different formula, deeming that it's a deeming fiction, deeming that out of the SPGS, solar power generating systems and windmills and other renewable energy devices, government has come up with a deeming fiction stating that 70% of the value is considered as goods So the deeming fiction is for the value of the goods. And then 30% is deemed as services. So 70% of a single transaction, 70% is taxed at 5%, 30% is taxed at 18%. Thereby the effective rate of tax comes to somewhere around 8.9%. So from one nation, one rate of tax, or rather as a very simple small list, because there are certain important necessities and there are certain luxurious goods or certain sin commodities. So therefore 2-3 rates is not a problem. But then we have gone up with almost like 8 to 9 rates at present. Added to that, there are abatement system and there is a deeming fiction. So this has created some sort of a hiccup in understanding and ease of implementation of the tax also. I believe in the recent committee also, Nirmala Sitharaman ji had addressed and stated that there is a need to reduce the lists. Okay, and then to make the list of at least the possible rates of tax as simple as possible. Okay, so this is one important point of the journey where it could have narrowed down. The rate system had in fact broadened out. Okay, so that is one point which we have to, or rather the government has to look into and see that it is more stable on that front. Continuing on valuation, apart from this deeming fiction, there is also called the abatement. Of course, Act had not used that word specifically or explicitly in the tariff, but then in case of builders, there is 1/3 abatement for land and 2/3 is only taxed. So there was a huge uproar or rather dissentiment coming up from various sectors stating that the reality is not so. If you take metropolitan cities like Mumbai, Delhi and Chennai, Bangalore kind of stuff, there the value of land may be more than 50% and construction built up will only be 30-40%. Whereas in case of a rural area, the situation will be opposite. The land values are hardly anything and then the construction will occupy 70-80% of the value. So earlier, if you take the precedent, earlier it used to be like there used to be an option to the taxpayer stating that if he is able to produce the exact books on the valuation or costing, they can go by that. Otherwise, the deeming fiction will apply. But rather, if you see them, these are hard-coded. Be it the solar power rate that I have said or the works contractor rate that I have discussed. These are hard-coded and there was no option. They are not soft options. Rather, they are hard-coded into that, stating that by default, this is the only way in which it has to be taxed. Okay, so maybe there is, in the hindsight, if you see that, maybe having multiple rates will lead to a day where the number of rates will be even more further. And recently, Supreme Court has also remarked that the decisions of the council are not binding and it is very much within the legislative liberty of the states to come up with their own rates and their own notifications and the structure of implementation of the act. So that is really, of course, judicially, it may be absolutely perfect. But then when it comes to the dream with which we started, one nation, one tax, and a good and simple tax, maybe that could be a very difficult thing to implement because much of the benefit of the GST we are reaping is only because of the stability of the structure across the nation. So if we are deviating on that very founding premise, it will be very difficult. But of course, various representations have been made from the trade bodies also. I happen to be the chairperson of Direct Tax Committee of FAPSI AP. So from there also we made a representation. There is a huge need that it has to be simplified. And then the next point I want to discuss is the journey on the reverse charge mechanism. Okay. So reverse charge mechanism had also gone into a lot of roller coaster kind of changes in these 5 years. So when we started with 2 kinds of reverse charge. One is section 9(3) reverse charge, that is where it is notified to be under reverse charge. And the 9(4) reverse charge, which is applicable as and when the supplier happens to be an unregistered person. Okay. So the same parallels of IGST, section 5(3) and 5(4) are all there in IGST Act to provide for this RCA. But then it started with a very tough note stating that every unregistered dealer person is liable to be reverse charged. And then they relaxed it to some extent, stating that if an aggregate purchases of a day from an unregistered person exceed to be 5,000, then they are subjected to reverse charge. And then they are further relaxed. And then gradually total 9,4. That means the default reverse charge as an a supply is procured from an unregistered person, that was totally removed from the act. Okay. In fact, it could have been reverse. That is what it could have been better if the imposition starts at a very lower base and then it starts penetrating deep. But then somehow the GST had started with a big penetration or a big compliance, and then gradually it got smoothened over time. But if you take this reverse charge under section 9(3), lot of things are getting notified. Of course, lot of them are there in the historical perspective. Much of the entries are common of service tax, but then certain new heads have also come into play. Okay, and joining this reverse charge bandwagon is the reverse charge on TDRs from in the sector of works contracts again. So then it had become lost. Most of the people in industry, most of the players in the industry couldn't quite have a hold of the provision of that reverse charge on TDR, where is applicable, when it is applicable. Okay, this reverse charge, that too, when it is commercial, there is one treatment. When it is residential, there is another treatment. Even within the residential, if the flats are sold, then it is of one treatment, and if the flats are unsold, then only the reverse charge is applicable. Okay. So these multi-staged implementation was also a cause of a little complication. Okay. Of course, there is enough of justification why this rule was so drafted, but then it could have been very simple. That is what the overall understanding of the trade. So when we see the way in which the reverse charge had taken the shape over time, gradually the unregistered reverse charge has totally waned out, except for the works contractors and the builders services, where it is still there in terms of TDR and in terms of 80-20 rule, where the procurement from registered person falls short of 80, it is still under reverse charge. So except these two reverse charges under 9(4), much of the 9(4) reverse charge was taken off. And the list of 9(3) is pretty stable, not much of changes. The same old GTA advocate services were still under continuation. More or less, it is fine. And then coming to the journey in terms of ITC, which is in fact the basic line of GST rise on in ITC. ITC is the heart of the GST Act, undoubtedly, because it is the ITC that eliminates the cascading effect and makes the GST a VAT, a value-added tax. So without ITC, there is a cascading at every stage, and there is no point of value-added tax at all. Okay, so the basic line, the basic bottom line of GST lies in ITC. So when we see the opening speech or the memorandum when the GST was introduced and rolled out in the year 2017, it started with a notion of a seamless ITC. Okay, that means almost everything that is, there will be very, very minimal blockages on the chain of ITC, and it will be ensured that most of the ITC flows throughout the chain without any restriction. Of course, one very good thing that had happened with the GST is the document-based verification that used to be there in the olden days, like in the form of C form, H form. So those has gone out, which is very good thing. Okay, thereby the compliance had become a lot simpler. But then lot of new restrictions had been imposed in GST in the area of ITC, which had made it a very hard nut to crack. And then lot of issues when we sit in the grievance redressal committee, most of the issues, rather 90% of the issues are only in the area of ITC. Okay. We started with an eligibility criteria. Before we go into that, of course, indirect taxes are procedural, and the ITC gets vested only when the necessary conditions of having the documents on hand are satisfied. Okay. One of the conditions that were laid down in section 16(2) is, out of the 4 basic conditions, that we must have the invoice on hand, we must have the goods and services delivered to the taxpayer, and the third one is the supplier should have paid the tax, and the fourth one is the recipient should have claimed. Out of the 4, one very difficult condition to live with is the supplier has to pay his ITC. Now, practically, there is no ways and means to check whether supplier had paid the tax or not. As a recipient, there is no visibility on the supplier. Of course, whether he filed the GSTR 1 or not, whether he filed GSTR 3B or not, they provide certain insight, but that is not sufficient enough. Because my supplier, my means I'm taking the shape, I'm taking the stand of a recipient in this case. If I happen to be a recipient, my supplier might have filed the GSTR 1 and might missed the 3B of that month, but might have made it good in the next 3B. So what is a tax payable in 2 months? He might have paid it in bulk in a 3rd month. And the Act had provided the chance to rectify any of the GSTR 1s or 2s or 3Bs until the September that follows the financial year. So therefore, there is a big time window permitted under the Act. But meanwhile, if we take the GSTR 1 versus 2 or 2A versus 3B reconciliation, we are having no clue whether the supplier had paid the ITC or not. So this had become a very cause of concern across the country. Lot of litigation had developed on that. And many people had resorted to high courts. And high courts have stated in most of the cases that the recipient should not be penalized for the misdoings of the supplier. Okay, but all said and done, the Act is very clear. And much of the department officers, they are implementing the Act. And the very Act says that the supplier should have paid the tax without providing for any information. There is no portal. There is no way we can check. There is a portal or there is a facility to check whether 3B is filed or not. But there is no way to come to a conclusion that in the 3B, whatever the tax that he had paid, whether the particular invoices that are referred are figuring in or not. Okay. Now, in this financial year 2022, there is an amendment to section 38. So it's a welcome amendment. So I draw the attention to that recent amendment proposed by, or rather implemented by the Finance Act 2022, which states that the GST portal itself will say, now the GST portal itself will say whether the supplier had paid the tax or not, or whether the supplier had claimed any inappropriate ITC in his front. So therefore, those implications, those eligibility conditions that are coming up from the compliance part of the supplier, now the onus is being taken up by the portal. It is one way a good thing, because ultimately what is going to happen is the direction in which the Act is moving, rather the implementation is moving, is that if we get to see some ITC in GSTR 2A or 2B, then it is an eligible ITC. Otherwise, having an invoice or having the fact that we have paid the supplier will not come to the rescue. So that is broadly the sense in which it is going on. Okay. Of course, there is mixed opinion among the trade on that, but whatever it is, we have to live with the fact that the present Act provides for one of the most important conditions, that the supplier should have paid the tax. Okay, so therefore the ITC of the recipient is at stake if the supplier is not going to comply with the law. So therefore, of course, what we are advising, all of us or most of us, or what the chartered accountant community is advising the taxpayers is that be a little bit more cautious, amend the agreements and make it very clear that the tax will be released, the tax portion will be released only when the respective returns are filed and the ITC comes and appears in the GSTR 2A or 2B. So that is the only way, and the Act is very clear and strong on that point. And every amendment after the amendment, if we see section 16(2) had been amended, I believe 3 times so far. So all the 3 amendments so far are only in one direction, stating that unless it is appearing in GSTR 2A or 2B, that ITC is not going to be available. Okay. Now, there were a lot of changes, lot of amendments that had happened on this particular ITC itself. So when we started, there were hardly any restrictions on the cross utilization of ITC. Okay, except for the fact that SGST and CGST cannot be used interchangeably. In a sense, the input of SGST cannot be used to offset the liability of CGST, and similarly the opposite, vice versa. But then there was a huge change in terms of amendment of 49(5), and then a rule was introduced. So what states that one should first exhaust the IGST, ITC or ITC under IGST before proceeding to use the ITC under CGST and SGST. So therefore, in the manner and in the order of utilization, the Act had witnessed certain changes, which made the utilization a little bit tighter. Okay, but then there were a lot of complaints from the trade stating that this is resulting into unnecessary held up of ITC. It had relaxed it to some extent, stating that the rule that IGST, ITC shall be utilized first will stay intact. But then the remaining portion can be used either against the SGST or against the CGST liabilities as per the wish of the taxpayer. Okay, so there was a little, a slighter relief on the cross utilization of ITC, but still cross utilization is not totally free. Okay, so there are two kinds of restrictions. One is a restriction on the manner, and the second one is a restriction on the order. So when it comes to the restriction on the manner, we must be very cautious as to what is available against what and what is not available. So the finality on that is CGST input cannot be used to offset the liability of SGST. Similarly, SGST input cannot be utilized to offset the liability of SGST. Okay. And when it comes to order, we must first ensure that the IGST input is exhausted and then only proceed to utilize the inputs under SGST and CGST. But once the IGST, ITC and IGST output are set off, the balance input of IGST can be used in any order. So the relaxation is only with respect to the order, but not in respect of manner. And that too in only in IGST. Okay. So therefore, it had become a little tough to understand. Most of the people have raised concerns on that. And the support of the portal was also very limited on that. In a sense, the portal had allowed us to do whatever the change that we require, that or the editing that we require, because it is an option. Necessarily, the option has to be given to the taxpayer, but then it is not pre-filled in 3B. So that had become certain procedural difficulties were faced on that. And coming to the amendments of ITC, again continuing on ITC, my talk on ITC. When we see the restrictions under 17.5, there are not much of amendments except for one welcome amendment that had happened, that motor cars, the way it was drafted is that unless something is used for transportation of goods, ITC is restricted. That was a language to start with in 2017. But there is a very good welcome amendment in the Finance Act 2019 from 1st February of 2019. Act had permitted ITC on every kind of a motor vehicle except where it is used for transportation of passengers, that too with a seating capacity less than 13 members, including the driver. Okay, so therefore it is always good when the Act comes up with a prohibition, because whatever is not stated is permitted, rather than Act prescribing what is permitted, which is always a matter of debate. So it's a very good welcome amendment that had happened to section 17.5A, clause A. So now what had happened, it had ended a lot of litigation. Earlier there was a lot of litigation on this point. Like there used to be a laboratory on the wheels, the soil testing or the cranes or proclaimers, whether they are motor vehicles or not. Even if they are motor vehicles, they are not transporting the goods. They are only going and then doing the earthwork, and also ITC is not eligible on that. So a lot of advanced rulings have also come up by the literal interpretation of the wordings of the section. Now all of that had been done away with, and it is very good that only the cars and the vans of a seating capacity less than 13 are restricted, the rest of it all permitted. And one more litigation was also ended by the Act by a suitable amendment, so as to say, that is the incidentals on the motor vehicles. Like car is blocked, fine. What happens to insurance on car? What happens to repairs on car? What happens to the other incidental expenses like tires and all, replacement stores and all on the car or a vehicle? So Act had provided with the dynamic definition with the amendment in 2019. That's a very good amendment, stating that if the vehicle happens to be permitted, incidentals are also permitted. If the vehicles happens to be restricted or blocked, the incidentals are also blocked. Okay, so therefore no differential treatment between the main base item of vehicle and the incidentals that flow like repairs, maintenance, insurance, stores and all. Okay, so this is one good thing. This has ended up a lot of litigation. Okay. And going further on that, on the transportation subject itself, one of the major areas of concern is on GTA. goods transport agent. We all know the services received from a GTA are taxable under the reverse charge. But then what is GTA was defined in a peculiar manner, stating that whoever issues a consignment note happens to be a GT. But then what is a consignment? Moreover, it says consignment note or any other document by whatever name called. So what is a consignment note had been a matter of litigation all these days. Okay. In some cases, the department had opined that whatever the acknowledgement that is given itself is a consignment and therefore it is chargeable under RCM. And sometimes it has taken an opposite view that it is only an acknowledgement or a bill or a proof of payment, but it is not a consignment note, therefore not a GTA. Therefore, you are not the person liable to pay the tax, rather the other person has to pay the tax. So it is not reverse charge that is applicable, it is forward charge that is applicable. Okay. Of course, still there is no finality on that. It will be good. What we feel is it will be good if GTA is defined in a very explicit manner, rather than stating that whoever gives a consignment note by whatever or any other document by whatever name called, without that very loose or rather very free-flowing definitions are very dangerous, because the stand that RCM is applicable while it is not so, or the opposite, that it is not applicable, however they have paid the tax. So this has been a manner of litigation. So still there is some confusion happening on that. And then as a sectoral, if we look at it, one of the most affected sectors in the journey with a lot of amendments, almost the U-turns, if we can call it so, is the builders, the real estate builders and the works contractors. Okay, so we started with, there is a transition. If we see, there are multiple transitions happening over there. There is a transition from pre-GST to post-GST. Of course, everybody had faced that, but then the builders, if you see, they are under two multiple or different tax like VAT and service tax. Then they have to come into GST. Now from 1/4/2019, the Act had come up with a different scheme for builders. So there is another transition happening. So the adjustment of the transition that was mentioned in notification 3/2019, that itself was a very huge and a complex one. Okay. So it goes to evaluate whatever is a tax that was already availed from 1/7/2017, that is the date of implementation of GST, to 1/4/2019, that is a date of transition. Okay. So first thing is we have to calculate what is the ITC availed and whether it is as per this notification 3/2019. And if there is any over availment of ITC, it has to be reversed upfront. And without any option from 1/4/2019, any project that was initiated after 1/4/2019, I'm not talking about ongoing projects, but any project that was initiated completely grounds up after 1/4/2019 had to necessarily follow the new regime. And the new regime is like that there is a concessional or rather reduced rate of tax applicable and without any availment of ITC. Okay, so therefore, if you see the builders, there are no ITC composition under the VAT scheme until 1/4/2017, sorry, 1/7/2017, and then they came into ITC regime for a certain time, like 1/7/17 to 1/4/2019, and then back again they were thrown into no ITC. So this is almost like a U-turn that was happened almost 2 times. So if you see the journey, the terrain is a little rough for sectorally. Of course, other sectors have not witnessed this much of a change, as so much so that the builders and the works contractors have to face. Okay. And moreover, there are concepts of affordable housing and non-affordable housing introduced, which is also new into the tax regime. And the benefit of this affordable and non-affordable is huge, 1% and 5%. That means a 4% change in effective rate of tax. And that definition is also based on 2 criteria, like how bigger the flat is. If it is less than 90 square meters, then it is considered as affordable. And another joint condition, the cumulative condition to be satisfied is the value of the flat, including land and the construction, shall be less than 45 lakhs. So if these 2 conditions are satisfied, then they are called affordable housing. Otherwise, they are called non-affordable housing, and two different rates are specified for both of them. Okay. And the next point is the timing of the tax. So it had been a matter of litigation even under the service tax as to when the tax has, what is the time of supply in case of these builders. So the time of supply had also been amended by notification 6/2019, where it is stated that this transfer of TDR and the service, construction service by landlord to by the builder to the landlord is taxable only upon completion of the construction. So therefore, even when it is conveyanced, even when the consideration had flown, the actual liability to tax shall arise only upon the completion of the construction. Okay. Now, is it only postponing the liability to pay the tax, or it is postponing the levy to pay the tax itself? That means whether time of supply itself is modified or the time of supply was held intact, but only when the liability has to be discharged. The relaxation is only to such an extent is still a matter of debate that is going on. But then it is a very good welcome change. There is a parallel change in income tax also, stating that the liability to pay the tax was postponed. The timing of that was postponed to the completion of the project. It's a good amendment. But then if you see the holistic setting, there are number of concepts coming all at once in case of this builder community. Anyway, this is not an exclusive talk or webinar on builder community. Therefore, I am not going much into that. But when we retrospect what had happened over these 5 years, there are certain turbulent times through which these sector had to pass through. So that is one point. Okay, then coming to the judicial or the implementation part of that. Of course, we see the time of the time of limitation of section 73 and 74 are prescribed or based on the due date of filing of annual return. And what section 73 had said is the due date to finalize the assessment and raise a demand is 3 years from the end of the due date for filing the annual return. And because the first financial year 17-18 had been postponed quite a bit, dragged for quite a bit, parallelly the time limit for adjudication has also been postponed to that extent. Most of the 17-18 assessments are happening now. But when it comes to the assessment proceedings, they appear to be more or less like a parallel proceedings. Now, if some scrutiny is happening under section 61 or a non-filer under section 62 is happening, can the same period be picked up by audit under section 65? Okay, so that is an area of concern. Okay, we could see that lot of proceedings under 73 and 74 had been initiated, whereas the same were already subject matter of some scrutiny under 61. Okay. So because it is a first year of implementation, first year in terms of adjudication, now the adjudication is getting ended by this end of the financial year. So therefore, we have to still wait and watch how the courts will decide on that, whether they are parallel proceedings or is there any sequential order, like in case of income tax, that this assessment shall have to happen only after that assessment. Now they are appearing to be like the scrutiny of section 61 and the best judgment of non-filer and the audit, which can be done without any preconceived notion that as per a policy, the chief commissioner or whoever is a designated proper officer can pick up any file for audit, whether they are parallel or whether one subsumes the other. So this is where the major concern is happening. There are no much of amendments on this area. More or less, the act is stable right from the day it was introduced. But then the challenges on the implementation are on these lines. Okay. So when it comes to the tariff, how the tariff had behaved over the 5 years of time, if we look at it, tariff had seen quite a lot of amendments. Okay. There were number of special carvings, special carve-outs that were made out of the existing tariff. Like, for example, if you see the cab services, first initially the way it is implemented, and then after that the forward charge with ITC, and then 5% concessional rate without ITC was provided, and that is at the option of the other person. And then based on the recipient, some of them are under reverse charge mechanism also. Okay. So if you see the tariff, of course, there is also a lot of requirement to get consolidation. Okay. But the changes that had happened in the tariff were also quite a large amendments. Quite a large amendments had happened. Builders I have already stated, therefore I'm not going into that. And solar power and renewable energy devices have also gone through the lot of change with the deeming fiction and the deeming kind of that. Okay. And then one of the most debated point on that is the food and the food commodities like rice and all. Initially, they were based on the branding. So if it is branded and then packed under a unit measure, the pack, if it is there, then it is taxable at 5%, otherwise it is exempt. And then what is a branding? That is a matter of debate. Okay, whether if the brand was already surrendered without any exclusive rights owned up, and then it is only for identification purpose, then it is not considered as a brand. And in the recent council also, there are certain amendments happening on that. Okay. And then one of the basic structures of the GST is compensation cess, where certain commodities are levied for compensation like coal, briquette, tobacco, and then cars, and then mainly these commodities, carbonated water. These commodities are also subjected to compensation cess. Okay. And then the compensation cess was initially introduced to compensate for the states that they suffer in the lack of expected growth in revenue. Okay, because of this change from source-based taxation to destination-based taxation, or because of implementation of GST Act. So that is, in fact, has to end within a period of 5 years, but then we have seen that it is now going to be extended. So these are the major changes that had happened. Any specific change or anything that is there from the participants regarding as a question and answer, which I can, which there is a need to elaborate, I'll go and elaborate on that. Okay. Before I conclude, what I say is, we all know the taxation is a very dynamic subject. It has to evolve based on or considering the considerations of all the stakeholders. So being dynamic, agile, and then being when to witness a lot of changes is an inevitable part of any taxation. And then we are also, and it is a total paradigm shift from even on the federal structure side, on a jurisdictional side, one officer is taking care of 4 acts at a time. So it is all new to us. It is all new to us. Therefore, a lot of trouble is inevitable to happen. But then we have come up a long way. Yeah. And I will be failing on my duty if I am not able to address the issue of our chartered accountants. I'm not looking at it from a professional, not only from a professional opportunity point of view, but then it is also good for the taxpayer to have certain sense of oversight and then diligence that is happening within the office by a chartered accountant in the form of GST 9C. Okay. A lot of chartered accountants have contributed a lot in the form of GSTR 9C, filing of GSTR 9C also. But then again, we can see that the GSTR 9C had started with a very ambitious note that wherever the turnover is more than 2 crores, which is almost like a huge number, more than 85% plus percent of the SSEs falling in that, shall get their books of accounts audited by chartered accountant in the form of a reconciliation statement by 9C. And then gradually it moved up to 5 crores. And then now it was totally taken out from that net. And then it is totally based on a self-assessment. Now, is it good for the taxpayer? Is it good for the profession? Is it good for the government? So how is it going to play out for all the tax stakeholders? We have to see. But when we look at the GST journey, the role of a chartered accountant, starting from an audit of every SSE who is having more than 2 crores of turnover, 1.5 is a composition dealer's turnover, and 2 crores, which is a very close threshold. So almost like all the GST registered persons, barring those who are under composition or those who are playing in that small margin of 1.5 to 2 crore, they came into the net of mandatory audit by chartered accountants and cost accountants. Okay. Now there is no such a kind of a self-check how it is going to play out in the future. Definitely there will be a lot of hike in the scrutiny. Okay, because they are not vetted by a chartered accountant, automatically the department of scrutiny has to be there, and inevitably there could be certain lapses in that returns to happen. Okay. And what is the exact role a chartered accountant can play if there is no sort of an attestation or a reconciliation mandated? So, and when the services are totally based on a consultancy mode of a thing, how is it going to play out? We have to wait and watch. But then the change had happened. Okay, so these are certain important milestones in the journey of GST over 5 years on all the fronts of ITC, taxation, tariff, jurisdiction, and audit. Okay, because number of changes are so many, I may be missing out on something very important also. Spare me for that. Okay, and of course, we are all in a happy mood. I know that a lot of branches are having a cultural events happening in the evening. So I don't want to stay on that also, stay in between the happy celebration and this one also. And I am very happy and thrilled and excited. It provided me an opportunity to go through the chronicle of the GST one more time, all through the 5 years, and then to pick and choose what are relevant to be discussed within a 45-minute to 50-minute of a time. So I sincerely thank the chairman and SIRC members, Subbarao sir and Chinnamastan garu and Naresh Gali garu and all the other organizers. And any questions the participants have on any specific amendment on this, I'll try my level best to answer. With this, I hand it over back to the chair. Thank you, sir. Sir, Subbarao sir.
Sir.
Yeah. Okay.
Members, any
questions, they may put it in a chat box or they may also ask it or by unmuting.
Yes, sir. Hello.
Yeah. Hello, sir.
Yes, tell me, sir. Yeah.
No. Any questions?
No, sir. If all audience, if there are any
I-
questions, we'll ask them to unmute and speak, sir. There are no much questions here. Actually, we are streaming it on YouTube also, so there is no option to post the questions here in chat box. Those who are here, they can post it here. In YouTube, we have already crossed 100 viewers. Here, just 16 to 20. 1 minute. So maybe we'll close this one, sir. Since it is a journey session, we can propose a formal vote of thanks.
Okay.
Thank you.
So thank you, Siva Prasad garu. Thank you very much, sir, for your brief explanation on GST, especially on ITC and industry-wise problems and judicial implementation and tariffs. Though the time is very limited, but you tried your level best to utilize the time, and so definitely we will utilize your services in a big forum, sir. And
Thank you.
I'm very much thankful to you and for sparing the time. Thank you very much, sir.
Thank you, sir. Thank you. Thanks for the opportunity. And one more time, a happy CA day. And may the profession be held high, and may the profession scale up to greater heights, with all the professionals being very happy, having the professional satisfaction and also equally good remuneration. Thank you, sir.
Thank you.
Thank you, sir.